Good morning, folks, and welcome back to Almus Market Mornings. There's a lot for us to discuss. Friday was an action-packed day, especially for the domestic markets, and we have an action-packed week ahead of us as well. The RBI lowered rates by 25 basis point, bringing the policy rate to 5.25%. It was a unanimous vote to cut rates, and the central bank also announced a host of measures to inject durable liquidity into the system. Now, this week, we have the interest rate decision by the Federal Reserve. It is widely expected that they will cut rates, and this expectation has been a roller coaster as members within the Fed remain quite divided. Good morning, Chinke. Take us through last week. How are you rating RBI's policy, and what's your lookout from this week? Apart from the Fed, we have meetings by a few other central banks as well. Looks like one busy week before things get mellow because of the holidays.
Yeah, you said it, Swaraj. It's going to be a very busy time, but yes, after that we're going to move into a dull period of year-end trading. RBI move was not surprising for me. I think on Friday we shared that we favor a rate cut, although market had many skeptics that RBI should not cut rate, considering the currency's continued weakness. However, RBI has preferred growth impetus as their first uh, preference and cut the rate by 0.25%. Also maintained a neutral stance, injected fair amount of durable liquidity into the system. So RBI not showing concern about the rupee weakness also actually kind of creates a confidence in the market that they are not unduly worried and possibly think that fundamentals will eventually uh, guide the rupee value. So actually once they cut the rate also, while rupee did move a bit lower, did not even cross 90.10. The previous high has been at 90.43, and there was two-way action actually in the market. Early morning there was also selling in the market. Stocks took it positively. Now going forward, they are projecting a higher growth rate at 7.3% from 6.8% projected earlier. Inflation at 2% projected now for FY26 versus 2.36% that was projected earlier. So I think their overall statement also gives a sense that they're keeping space open for future action. However, I'm not so sure about it because the recent inflation numbers had a lot of base effect advantage, and also the core inflation number, stripping out the volatile food and fuel inflation, is still hovering around 4.5%. So I think that is something we cannot assume that they will be cutting rate again. So a lot of things will come into play as far as that. But currently, I see this move as a good move, and perhaps I think market will also take it as a very positive, particularly in the stock market and the bond market as well. On the global side, we had some data from the uh, US government side, that is on the PC core inflation. It was, however, pertained to September, and we are already in December. We should be actually getting the November inflation number now, but the date of that is not certain. However, for the record, September inflation was unchanged from August, although the core PC year on year was slightly lower at 2.8% from 2.9%. Significantly, this is well below the year-end projection that Fed had given for the inflation. And following that, we also had the Michigan Consumer Sentiment. This is again a private data survey, which improved to 53.3 from 51 in the previous month. And the first improvement is the headline index in 5 months. Again, more importantly, the inflation expectations fell by 2 basis points, and that is for 1 year. And the 5-year inflation expectation also fell from 3.4 to 3.2%. Now, already market is discounting very high probability of a rate cut by Fed in December. And these data actually also support their action to, bring down the policy rate to 3.5%. Um, just one more data on today morning was the Japanese economy, showing GDP earlier estimate being further revised down to minus 2.3%. Earlier estimate was for minus 1.8%. Whether this influences the Bank of Japan's decision on December 19 to hike the rate or not is still debatable, because in any case, Bank of Japan's decision is not final until it is actually announced. So that still keeps the window wide open. On ECB side, we had the inflation number slightly higher last week, and then we also had unemployment steady. Retail sales were strong. So overall, eurozone economy holding up, while UK awaits the MPC decision on rates after recent inflation number showed some fall as well. So overall, as I said, we are now getting into a very busy week of rate decisions by Fed, of course, on Wednesday. Then we have Australian Central Bank preceding it tomorrow, Canadian Central Bank, the UK MPC, and further ahead we will have rate decisions by the ECB and BOJ, and of course the Swedish Central Bank as well. Now, when we look at where they are poised, these central banks, most of them are probably nearing the end of the easing cycle. Definitely ECB, going by current statements by the ECB members. Australia also. Canada, recent numbers, very strong GDP and superbly strong employment number on Friday. I think Canada might as well be closing in on a hiking path. Japan is already expected to hike. Fed is the only unknown. So Fed might, depending on the new chairman who will replace Powell, and depending on him, and also the number of people who are dovish increasing in the Fed board. We might well have more easing by Fed. However, that depends on the data that is forthcoming on inflation and employment. So if we have a situation where Fed might continue to ease or at least maintain a dovish stance while others are nearing a hike or actually hiking, I think we are moving to a situation of another year of dollar selling, because US yields become lower, and then other yields are actually steadying or going up. So that is one perspective for the new year that one can harbor. But of course, we still have a lot to digest in terms of the data, and we always have this hangover of high deficit fiscal challenges in various countries, whether they will push up the yields and then lead to even influencing the monetary policy, or whether any other challenge like the equity market sell-off, which can lead to QE from Fed or other central banks. These are things that are unknown, but we are entering the new year with a lot of possibilities. Definitely, dollar has been hovering in the range. I think possibly setting up the similar situation till the year end. Even gold and silver have tried to break on both on the downside as well as on the upside, but have seen decent two-way action. I think after a long and big run up, these metals are also quite steady in a range. What we are seeing is some recovery or in fact a strong recovery in some of the base metals, and perhaps even oil is giving some indications of up move, technically. It's more of a year-end action that we are seeing, but more watching what the central banks are going to say in their upcoming meetings. So market is going to wait and watch, take all the inputs, analyze on the holiday period, and then of course New Year will probably set a new trend. And for as for the rupee is concerned, definitely what shape the FIS flow will take in the new year. And that has been the biggest factor that has driven the rupee low to its new lows, and also made it the gross underperformer during the year. Whether that will change in 2026 is what we are going to look at. Thank you.
Thank you, JK. And yeah, Week ahead. We have got rate decisions by a lot of central banks: Australia, UK, Canada, Fed, Japan, ECB, Sweden. So a lot of them seem towards the fag end of the rate cut cycle, and that's the thing to keep in mind. But overall, that's what it seems like, and we are seeing currencies also go into settle into a range. Uh, Dollar has remained in a range. We are seeing gold and silver. They are having two-way action, but remaining in a range. And I think slowly this volatility will die down. When it comes to RBI, we cut rates by 25 basis points, injected a durable liquidity into the system. The central bank doesn't also overly seem concerned about the rupee weakness. In fact, even after the rate cut, we saw two-way action over there. Overall, projecting higher growth for FY26 and next year, while inflation is expected to remain lower. So yeah, that's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.